Hi everyone, welcome back to another session on strategic financial management. So today is a final session for you and I'll be having the assignment discussion today. I'll be going through three documents. One is your assignment brief. The other is the assignment sketch that I've prepared for you. And the last, or maybe in between the first and the second document, I'll be going through another document, which is the assumptions that you need to calculate the investment or to do the investment appraisal question. So this is your assignment cover sheet. I think it's a little different now, if I'm not mistaken. Anyways, so before you start your assignment, I repeat, before you start answering your assignment, make sure that you attach the entire cover sheet and the assignment brief to your assignment. So this entire thing has to be attached, right? And then on the next page, that is when you will have to start answering the questions. Clear? So this is your assignment brief. You have three main tasks to address. The first task is a briefing report. The second task is a report. And the third task is also a report. So all three are reports. So let's look into the briefing report. So here I'm just going to read the questions. And when I go to the assignment sketch, I will teach you, or maybe I can do both together. I think that would be better. Yeah. Let me open both the documents at once so that you'll be able to get a clear understanding. So I'm going to go through both the documents at the same time, the assignment sketch and the assignment brief. Okay, so this is your assignment brief and this is your assignment sketch. Let me adjust the screen. Yeah, that's better, right? Zoom it a little bit. Right. You have recently joined PENCO. PENCO is a company, a small pension fund that aims to strategically invest in low-risk companies with a historically satisfactory return on investment. As a junior analyst, your first task is to review the market and select two companies listed on the London stock market. As I said before, you can choose any, right? Anything, any companies that is related to your country. So if you're in Qatar, make sure that those companies are registered with the Qatar stock market. If you're in Dubai, Dubai. If you're in Canada, Canada. If you're in Saudi Arabia, Saudi Arabia, the other countries. And to access their financial statements. So the point here is that the primary motive here is that you should be able to access the financial statements of the company. And that is the reason why we look for companies that is registered with the stock market. At the end of the report, you should make recommendations to PENCO to invest. Calculations and financial ratios supporting the recommendation should be appended to the report for the board's attention. Yes, this is something that majority of the students fail to do. I have to keep repeating again and again and again. Please pay attention. Whatever the calculations that you do, all calculations related to financial ratios and investment appraisal methods, all your rough work. If you're using an Excel sheet, take a copy of the calculation and attach it under appendix. So you will complete your assignment. At the end of the assignment, you will attach your reference list. After your reference list, you will have to type another heading called appendix. And then under appendix, you have to attach all your calculations. Right? So this is a must, as you can see. It should be appended to the report for the board's attention. So your first question is, analyze financial statements to assess the financial position of the organization. Recommend organizational decisions based on evaluation of financial statements using financial ratios. Propose managerial recommendation on the strategic portfolio of the organizations based on financial analysis. Apply financial appraisal methods to analyze competing investment projects for the organization. Justify strategic investment decision to the organization using relevant financial information. Critically analyze strategic investment decisions using information. And this is a briefing report. And it's okay if you exceed the word limit. It's totally fine, but don't exceed, it shouldn't be like 10,000 words. It's okay if it is around 2,000, 2,500, I'm fine with it. Okay, because I completely understand it's quite hard for you to write a report addressing all these tasks within 1,000 words. It is difficult. So what you can do is, I'm allowing you to exceed the word limit on the condition that it should be within 2,000 to 2,500 words. I'm fine with that, right? So you don't have to worry about the word limit. I hope it's clear. And this word limit is excluding your calculations and any tables used. So if you are using any tables, that word count will not be included in this word count, right? So anything that is in the table, within the table, right? It is not counted it's not counted, right? So excluding tables, excluding calculations, 1,000 words, but I allow you to go up to 2,500 words. Clear? So now let's look into this. So first, you have to start with the brief introduction to Penco Company. I repeat, brief, right? A very brief, maybe 3 sentences, 3, 4 sentences, that's enough. And then a brief introduction to the selected companies. You have to give a brief introduction of the selected companies, the 2 selected companies. Again, brief introduction, right? You need to give a brief introduction of the companies that you have selected. And then you're going to analyze and interpret the financial statements. What are their revenue? What are their expenses? What are their profit, loss, assets, liabilities? Now here you're going to compare and contrast. So what is comparing and contrasting? You're saying, okay, A profit is this, whereas B's profit is this. This is comparing and contrasting, right? So that's the first thing that you need to do. Next, you're going to calculate the financial ratios of both companies and interpret the results, which company is better and on which terms. So say, for example, if the liquidity ratio, the current asset ratio of company A is better than company B, you have to give the interpretation. Why is it? What could be the possible reasons as to why their current ratio is better than company B? Right, so you're going to calculate the financial ratios for both companies. Here you're going to do a comparison. Which company is better? It's just not calculating and giving me the result. You have to interpret the data. This is better than this. Why? These reasons. Clear? Next, propose managerial recommendation on the strategic portfolio of the organization based on financial analysis. So now you're going to give a manager recommendation. Which is better, right? Is company A better than B based on the financial statements? You've done a comparison of the financial statement. You've done a comparison of financial ratio, and then you'll be able to analyze which company is better. So you have to propose a manager recommendation and justify which company you would invest as a manager, the pros and cons of investing in the companies based on the financial ratio interpretation. And then you're moving on to the next task, investment appraisal. And information for this question is already given, that is on the LMS. I will show you the document. And the assignment brief and the assignment sketch is also on the LMS. It's under a folder called important documents. Okay, please go through it. You can download it. So I want you to calculate all 4 methods: payback period, NPV, ARR, IRR. Some of the students, they calculate payback period, NPV, done. No, you need to calculate everything. And then you have to justify the strategic investment decision of the organization. You should tell me which company should you go with. Now here, it could be project A or project B. So you have to justify which project is better, A or B, and why do you think it's better? Clear? You have to say. And then when it comes to financial ratios, I want you to calculate all the financial ratios that we have studied, that I have covered in the session. Most of the students, majority of the students, they calculate liquidity ratios, profitability ratios. That's it. No other ratios. No, you have to calculate all 5 types of ratio. All the ratios that I've done, right, that I've taught you in the session, you have to calculate it. That is the minimum requirement. If you wish to calculate more, it's up to you. No problem. You have other calculation, you have other ratios that you can calculate, go ahead. No problem with that. But this is the minimum requirement. You need to calculate all the ratios that we've done during the session for the module that I've covered. Clear? So if you follow the step-by-step instructions that I have given, you're on the safe side. Okay? And please, I think only one student has sent me their annual report for the approval. You have a document that you have to fill, right? It's on the website. Please do ask the coordinator on how to fill it, where to get it. It's a document where you need to fill it and you have to mail it to me to get the official approval. So I will sign the document and say, okay, approved. Okay, so you have to do it. But before that, you can informally get my approval just to see whether, these companies are okay. But then you have to get that official approval as well for you to go ahead, for you to proceed with the assignment. Okay. Right, the next question. The board of PENCO approved your recommendation and decided to purchase stock in the 2 organizations you recommend. In fact, based on your recommendation, they designed to invest more than anticipated. So the previous budget was £2 million, but the board wants to invest 1.5 more. So now their budget was 2 million, right? But the board wants to invest 1.5 in each of the 2 organizations, which means the total they're planning to invest is 3 million. So initially they wanted to invest 2 million. Now they decided to invest 1.5 in each company, right? In each organization, which means in total they're planning to invest 3 million, right? 3 million. What does that mean? It means that we have to find 1 million extra. 1 million extra. So you have to write a short report containing an introduction discussing the need for short-term working capital and long-term funds. A main body comparing the sources of finance, including their pros and cons, a justified recommendation of your choices of funding for the additional 1 million using a range of criteria related to cost and risk. So initially you can start your task to answer by providing a brief description on short-term working capital and long-term funds. Why does the company need short-term? We discussed about this yesterday. Yeah. Compare and contrast various sources of funds. The recording that I asked you to listen, the recording that I posted yesterday for you to watch has a clear explanation, a clear description on the pros and cons of each source of finance. So here in the second task, you have to describe. Again, comparing and contrasting the pros and cons. So you can say bank loan is advantageous for these matters. And then you can say it's again disadvantageous due to these reasons, right? You have to do a comparison. And recommend which source or sources of funds. Maybe you select one source of finance, or maybe you selected 2 or 3 sources of finance. So you need to justify, you need to tell me why. You have to convince me that this is the reason why we need to select this particular source of finance. So there's no right or wrong answer. As long as you can justify, you're right. Yeah, there's no right or wrong answer. If you can justify that you're correct, then I'm fine. I'll accept it. But you have to justify. You have to prove it. Or you have to convince me this is the reason. You have to give me facts, points. Justification, right? You have to do a fair justification. Clear? So you have to also discuss the advantages and disadvantages for the company of the selected source of funds and discuss the cost. You know, every source of finance, they have a cost and they have a risk as well. Yeah. Now, when it comes to bank loans, what is the cost? Interest has to be, there's an interest charged. This is a cost. It's an expense. Yeah. So these needs to be discussed. So those are the first two tasks. It's really very easy. And now we have another task. This is related to the case study. So let's read the case study. PINCO is excited by the result of your previous work and has asked you to review operations at Exiteco. So I'm going to just call this name as, call this company X because I can't be pronouncing this name throughout. So I'm just going to call this company X, okay? X, where it is an institutional investor. X manufactures electronic components for export worldwide from factories in Finland for use in smartphones and handheld gaming devices. So the ones that I've highlighted are the important points. I've done that for you as well, right? I think I've pretty much made everything easy for you. So the points that I've highlighted are the most important facts that you need to answer the assessment tasks. Right, these two markers are supplied with similar components by two divisions. So they have two divisions. One is a phone division, which is P, and the gaming division, which is G. And each division has its own selling, purchasing, IT, research, and development functions, but separate IT system. So, and some manufacturing factories, however, share between two divisions. Now, each division, they have their own selling, purchasing, separate IT system, everything is separate. But their manufacturing facilities are shared, right? All the other divisions, departments are separate for G and P division, but the manufacturing facilities are shared by both divisions. Now, this is where the problem happens. X's corporate objective is to maximize shareholder wealth through innovation and continuous technological improvement in its products. The manufacturer of smartphones and gaming devices who use X's components update their products frequently and constantly compete with each other to launch models which are technically superior. This is what happens when it comes to technological devices, yeah? It's always improving. It's always changing. You need to adapt, yeah? X has a well-established incremental budgeting process. Yes, C. What is the budgeting process that they're following? Incremental budgeting process. Divisional managers forecast sales volume cost months in advance of the budget. These divisional managers are then scrutinized by the main board and revised significantly by them in line with targets that they have set up for the business. The finalized budgets are often approved at the start of the accounting year. Another problem. The final budgets are often approved after the start of the accounting year. This is a problem. The approval has to be given at least before the start. At least the least that they can do is to give the approval by December. So they can, when they start in January, they know the budget. But what did they say? The finalized budgets are often approved after the start of the accounting year. Under pressure to deliver consistent returns to institutional shareholders such as PINCO, the board does not tolerate failure by either division to achieve the planned net profit for the year once the budget is approved. Lastly, this is giving unnecessary pressure to the employees. The approved budget is released in the accounting year when the accounting year starts, and at the same time they say the board does not tolerate failure by either division, and they need to achieve the planned net profit. Divisional managers who are appraised on the financial performance of their own division have complained about the length of time that the budgeting process takes and that the performance of their divisions could have been better, but was constrained by the budgets which were set for them. Yes, there is a problem with the budget. Maybe the budget is not right. Maybe the budget is not achieved, but at the same time, they approve the final or they release the finalized budget with the starting of the accounting year, which is quite hard for the employees, for the managers to plan things ahead. In P division, managers had failed to anticipate the high popularity of a new smartphone model. Again, an issue. In P division, managers had failed to anticipate the high popularity of a new smartphone model incorporating a large screen designed for playing games and had not made the necessary technical modifications to the division's own components. This was due to the high cost of doing so, which has not been budgeted for. Based on the original sales forecast, P division had already committed to manufacturing large quantities of the existing version of the component and so had to heavily discount these in order to achieve the planned sales volumes. So what happened? They failed to anticipate the high popularity of a new smartphone. And they had already committed to manufacturing large quantities of the existing version. So they had to sell these existing version at a discounted price. A critical material in the manufacture of excess products is silver, which is a commodity which changes materially in price according to worldwide supply and demand. During the year, supply of silver reduced significantly for a short period of time, and G division paid high prices to ensure continued supply. Managers of G division were unaware that P division held large inventories of silver which they had purchased when the price was much lower. So what happened? G division had purchased at a higher price. The G division did not know that P division had already purchased silver when the price was much lower. So there is what? There's no communication, lack of management, lack of organization between the two divisions, no coordination, no teamwork. These are all issues. Initially, G division accurately forecast demand for its components based on the previous year's sales volume plus the historic annual growth rate of 5%, which is incremental budgeting system. They were able to predict it. However, overall sales volume were much lower than budgeted. This was due to a fire defect of their main consumer, which was then closed for part of the year. Reacting to this news, manager G division took action to reduce costs, including closing one of the three R&D facilities in the division. So what happened was, so it was not only internally, they were not affected just internally. They had external factors affecting their business as well, right? However, when the customer's factory reopened, G division was unwilling to recruit extra staff to cope with the increased demand, nor would P division reallocate share manufacturing facilities to them in case demand increased for its own product late in the year. There's no coordination, no teamwork. Yeah, they're not working together. So P division thinks that they're alone and G division thinks that they're alone. So even though they're sharing the manufacturing facilities, they're not willing to share their products or raw materials with each other. As a result, X lost the prestigious preferred supply status from their main customer, who was unhappy with G division's failure to effectively respond to the additional demand. So they lost one of their main customers. They were not happy because G division failed to respond to their demand. The customer had been forced to purchase a more expensive, though technically superior component from an alternative manufacturer. Penco's institutional shareholders representative recently appointed to the board has asked you as a performance management expert for your advice. So you need to imagine yourself as a performance management expert and then write the report. We need to know whether excess budgeting process is appropriate for the business and how this contributed to last year's poor performance. Obviously, as you can see, incremental budgeting system does not suit X company. They should change it. Why? There were so many problems. Yeah, they were not able to forecast. There were delays in releasing the budget. So many problems with this. So the company has to go for alternative budgeting system. They can go for maybe a rolling continuous budgeting system, or they could go for a zero budget system. Yeah, zero budget system would be much better. It's up to you to decide, right? It's up to you to decide. So whatever the decision that you make, you need to justify why you chose this particular budgeting system for the company. However, the shareholder representatives did also acknowledge that external factors had contributed to X's poor performance in the last year and suggested that it would be useful if X's performance reports distinguish between variances which has resulted from its own operation performance as opposed to external circumstances which could have been anticipated, which could not have been anticipated when the budgets were produced. You noted that many organizations address this issue by analyzing variances into planning and operational elements. So variances, you can take variances also into considerations. So variances means you have you call it the cost variance. Cost variance equals actual minus budgeted. So if the actual cost is more than the budget, right? If actual cost is more than the budget, it means it's an unfavorable variance, right? It's an unfavorable variance. Please watch the video that I told you related to variance analysis. There's a video, you can watch it. And I was also explaining about variances somewhere, I don't remember exactly where. So if the actual cost is more than the budgeted cost, I repeat, if the actual cost is more than the budgeted cost, it means it is unfavorable. Why? You did not budget it accurately. Actual cost was more than the budget, unfavorable. So it's an unfavorable variance. If the budgeted cost, right? Or if you say the actual cost is less than the budgeted cost, right? If the budgeted cost is more than the actual cost, or actual cost is less than the budgeted cost is more, actual cost is less. This means it's a favorable variance, right? So variance analysis also can be taken into consideration. Right, so they have 3 tasks. How many tasks? 1, 2, 3, 4. 4 tasks to address. The first task is very easy. You just need to critically discuss the key concepts, features, and importance of cost accounting. The first concept, the first part that we learned, the first few sessions, I think 1, 2, 3, I guess, yeah, those sessions we covered up everything related to cost accounting. So you just need to give a description on the key cost concept, explain in detail about the features and importance of cost accounting. Why is cost accounting essential for a business? Next, evaluate the weakness in X's current budgeting system and whether it is suitable for environment in which X operates. So you have to criticize why incremental budgeting system, why is the current budget system not suitable for X? Give the reason. And so here you can give a brief description on incremental budgeting system. Is it suitable or not? Like X is catering towards a diverse product that changes based on, as I've given a small description about it. And then you can go ahead and explain. You can give your own suggestion as to which budgeting system X has to follow. Next, evaluate the extent in which excess power performed last year can be attributed to external factors. Yes, like fire, price of silver, the sudden demand. They were not collaborated external factors. So discuss on the above factors and explain why they influence the company and how. Finally, discuss the potential benefits of discuss the potential benefits to X of analyzing variances into planning and operation elements. Here, so these are the points that you have to discuss. Right, so you can say operation variable pride of fair view of the actual performance, competitive advantage. This helps the organization to be proactive, which is essential component of X. Meaning, they said that they were not able to predict which part was that? This part. Right? So you also can say how well organization is managed. And finally, they have asked you to prepare a master budget. I know it is not in the question, but it is there in the assessment criteria. So you just need to develop a master budget for the organization, right? Just a draft, just a rough master budget for the organization. So when you answer the task, make sure that you address the assessment criteria. But I sort of covered everything. I have the instruction that I have given you. I have covered the assessment criteria as well. So I've made it very easy for you. So, but related to the other assignments, you don't have the assignment sketch for the other assignments. So when you're addressing the task for the other assignment, make sure that you go through the assessment criteria, because sometimes the question will be, it will be easy, but the assessment criteria would say, okay, this is what you need to discuss. So in the assessment task, you can see they have given AC 2.1, 2.2, 2.3, 5.1, 5.2, 5.3. It means you need to go through these assessment criteria. These are the requirements. Is it clear? And I'll show you the final document that I promised to show you. Right, this is a final document. This is uploaded on the LMS. You can access it, you can download it. So this is the information that you need to use to address the address task 1 investment appraisal method, right? So you need to analyze these two projects to calculate the payback period, NPV, IRR, ARR. You have to use only this. Okay, so task 1.4 to task 1.6, this is what you need to use. It is on the LMS. Please make sure that you download it. Is everything clear? Do you have any questions related to the assignment? Any questions? All clear? Has anybody got any questions? No questions? And please try your best, or I would say minimize the use of websites. Use books. There's so many books that you can use. Finance books, there's a lot. And I also posted some of the books on the group. Please make use of it. And use journal, again, ranked journals, peer-reviewed journals, not any journals, not any other journals, peer-reviewed journals, and try to minimize usage of website. And even if you're using website, make sure that these websites are reliable, they're credible, they are from a university, or there's a particular author and the author is a reliable, a credible person. Okay, Wikipedia, please don't use. And I think there's something called UK essays. These are not sources that you have to use. And if we go to Wikipedia, what you can do is, as I said before, I did a session on journals, academic writing. And on Wikipedia, you can go to Wikipedia and go to the end of the page. There will be links for the sources, for the original sources. You can go to that and then take information. From Wikipedia, please do not take. All right, then we'll wind up the session for today. I've done the assignment discussion. I'll see you all later. Thank you so much for attending the session today.